Ladies and gentlemen, good day and welcome to the Eldeco Housing and Industries Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Bhatt from EY Investor Relations. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on the call. Before we proceed to the call, let me remind you that today's discussion may contain forward-looking statements that may involve known and unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future results, performance, or achievement to differ significantly from what is expressed and implied by such forward-looking statements. Please note, the results and presentation are available on the exchanges and on our company's website. Should you need any assistance to receive them, you can write to us, and we'll be happy to send them over. Today we have on the call Senior Management of Eldeco Housing and Industries Limited, which is represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, Mr. Sanjay Agarwal, Group Vice President, Accounts and Taxation. We will begin with the highlights of the quarter, followed by Q&A. Over to you, sir.
Hello, everybody. This is Pankaj Bajaj. I would like to welcome everyone to Eldeco Housing and Industries Limited Q4 and FY23 results call. Thank you for participating in the call. Let me begin with a few comments on the real estate market, after which I will discuss operational and financial results for the fourth quarter and the year ended March 2023. The demand for quality real estate, particularly residential real estate, continued its strong trajectory in FY23. Several macroeconomic factors adversely affected global real estate demand in FY23, but there was hardly any impact on the Indian real estate demand. The size of the industry, which has been stagnant for nearly 10 years, is predicted to grow in the next 3 to 4 years substantially. The fundamental factors of rising salaries, good demographics, and rapid urbanization have not changed. The customer, particularly in smaller towns, is also unconcerned about interest rate fluctuations. Lucknow's real estate market remained robust during the year. Demand was not a concern, but supply was a constraint due to absence of new launches. Moving on to our performance, the fiscal 2023 was a flat year for us in terms of growth. Due to the lack of new launches, sales remained flat throughout the year. Despite signing up some new projects, we were unable to move them to the launch stage owing to land assembly issues, approval issues, or both. The company has already advanced about rupees 25 crores in these projects and have significant expression of interest from real estate funds who want to enter the Lucknow market for the balance part of the investment. At this stage, we cannot disclose the location or nature of these projects due to confidentiality issues. However, we expect the issues to get resolved in the first or second quarter of the current financial year. The positive side of this delay is that the prices have turned up in our micro markets and the launches will happen at price points higher than our original underwriting. Moving on to the operational highlights. During the year, the company handed over 4.15 lakh square feet with registration of 322 homes. The FY23 collections were rupees 158 crores. The area booked for the financial year was 2.01 lakh square feet. We successfully added land bank of 20.91 acres between April 2022 and March 2023. All our existing projects are developing well in terms of execution, sales, and collection, and we are confident that we will complete them all within or before the RERA timeline. I'd like to spend a minute on new launches. We have received RERA registration for our new residential project Latitude 27 and construction has commenced. We plan to formally launch it by the end of May 2023. We expect strong sales from Interior Phase 2, which we will launch during the second half of the year. Apart from these, we have signed 2 new projects where land assembly and approvals are under process. We hope to be able to formally announce them next quarter. Furthermore, we are working on building a strong project pipeline for the coming 2 to 3 years. To finance all this business development, we will look at an optimum mix of external debt and internal equity. Accordingly, we plan to raise debt this year against existing and new projects. We feel that the time is right to invest at this stage of the real estate cycle. Now moving on to our financial performance, the consolidated revenue from operations for the quarter stood at rupees 38.7 crores in Q4 FY23 compared to rupees 28.9 crores in Q4 FY22 and rupees 30 crores in Q3 FY23. The revenue from operations in FY23 stood at 129.1 crores compared to 126.9 crores in FY22. The consolidated EBITDA was at 18.1 crores for the quarter compared with 15.6 crores in Q4 FY22 and 12.2 crores in the third quarter of this financial year, which is Q3 FY23. EBITDA for the entire year was rupees 51.2 crores. The EBITDA margin stood at 46.8% for the quarter against 39.6% in FY23. The company's consolidated profit after tax stood at rupees 14.9 crores for this quarter, which is Q4 FY23, and rupees 44.4 crores in FY23. With this, I would like to open the floor for questions, if any. Thanks.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from Guneet Singh with CCIPL. Please go ahead.
Hi, sir. Thank you for this opportunity. So, sir, in the last Concall, you mentioned that we will have a sales value of 300 to 400 crores in FY24 and about 500 crores in FY25. So, I just want to understand, how much of it will be realized in actual sales for the coming years?
Yeah, the guidance that we gave remains unchanged. So that will be the sale booking number. So if you look at, we have given an investor presentation also. The area which is available for sale in existing projects is about 1 million square feet. And a similar area is already planned in the forthcoming projects. And this is not counting the fresh projects which we have not declared. So 2 million square feet at an average realization of 4.5 to 5,000 rupees a square foot, which is what our latest numbers are. So that is a sale value of 900 to 1,000 crores, and this will all get realized, will get booked in the next 2 to 3 years. So our numbers stand, whatever the guidance I gave stand. But there are 2 ways of recognizing the revenue. The latest accounting standards say that revenues get recognized when you get completion certificate and pass on the title to the customer. So obviously a lot of this will get recognized on the back end, except the running projects which will get recognized during this period. But of course, in the tax part, we continue to use the old method of recognizing revenue, which is percentage completion method. But for you, the relevant number is that the new projects the revenue will get recognized towards the the latter part of this period, 3 to 4 years. The existing projects the company is running, the numbers are, they, as you can see, they've been stable and they will not dip, they will only rise from here.
Okay, and how much were the sales value for FY23?
It's given there. I think it's, let me just recall. Fresh booking number, right?
Yeah.
The fresh booking number is about 100 crores, I think.
All right. And do we have any projects which will be handed over in FY24?
FY24, yes, we'll be handing over one of our big projects, Imperia, Eldeco Imperia.
Okay, so sales from that project would be realized this year itself?
Yeah.
And how much would that be?
See, it's a mix of a lot of numbers. There will be Imperia, there will be other projects also. So it's very difficult to, pinpoint, correlate the completion of one project with the declared number, because it's when you give the completion and handover to the customer. So the number would be slightly on a consolidated basis. The revenue recognized will be slightly higher than the current last year.
All right. And by what are the timelines for handover? I mean, in second quarter, third quarter?
I think by the third quarter.
All right. And the revenues for this would just be slightly higher than what we realized last year?
Yeah, should be.
All right. That's all from my side. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star 1. Our next question comes from Abhishek Agarwal with KR Choksey. Please go ahead.
Hello. Sir, my first question is, you have mentioned about debt raising. So can you throw some number on it for FY24 and FY25?
It depends on our new business development. That is required mostly for our and we are going, as I mentioned, we are going aggressive on it. But it should be in the about 100 crore range.
For FY24?
Yeah.
Okay. And are you planning to merge our unlisted entity in the near future, because it's a much bigger size compared to listed entity?
Nothing that I can declare right now. It's a complicated issue because there are multiple agencies involved. There are multiple RERA. As you know, that the unlisted company is bigger and is in multiple jurisdictions. So it is also controlled by RERA.
Okay.
RERA, so it's not something that we can, we have a very firm view on right now. But it's something that one keeps exploring informally.
Okay. If something we get approval or everything in line, so we can think on that.
Yeah, it makes sense for the two sets of shareholders. Of course, we will like to streamline that.
Okay. Sir, can you give me the segmental breakup of the new launches? How many projects in the residential or villa or commercial side?
These are all residential.
Okay.
And there will be a mix of group housing, which is apartments, multi-story apartments, and horizontal plotted townships, which Eldeco has been traditionally very good at. So it will be a 50-50 split between horizontal plotted development and group housing, which is apartments. And all will be in the Lucknow area.
Okay, sir. And you have mentioned about the realization of around 4,500 to 5,000 for the new project what we launched. So how much growth we are expecting compared to we did in the FY23?
See, because it's a lumpy business, very difficult to give quarter or yearly kind of forecast. But as I said, that we have been doing about 100 to 150 crores of annual fresh bookings for the last many years. But my number for the next 3 to 4 years is more than 1,000 crores. Now, which year we'll do how much, it depends on the stage of the cycle, but stage of the project. But on an average, we should be doubling or tripling from here over the next 2 to 3 years.
Sir, my question was more related to the growth on the realization. So, like we are expecting 4,000. Yeah.
No, so we have given a chart actually, where every year we have been. This year we have seen the highest realization improvement in realization in the last many years on a per square foot basis. Last year it was 3,800 rupees a square foot. This year it is 4,600 nearly. And going forward, we also expect it to improve. But the last year was an outlier in terms of residential market realization. The prices increased on an average, weighted average by 20%. This year we think another 10% should rise.
So it will be more than the normal growth in the real estate, correct?
Yeah. It's more than the normal because many years it has been stagnant for many years, and now there's an upward correction to correct for so many years of stagnation.
Okay, sir. I'm from the last few calls. I'm asking the same thing that apart from the Lucknow market, which are the market you are looking to grow? Because Lucknow market, though we have the potential to grow in the Lucknow market, but there are other markets where we can think on it. So what is in our plan right now on other markets?
So as of now, we are focused on the Lucknow market, and as I mentioned in my opening address, we already done significant BD, unfortunately, in the last year. Unfortunately, we could not bring it to the launch stage, which it has got delayed by a couple of quarters. Hopefully, we should resolve that. And I don't think we'll be constrained for growth because, and I've already committed to that, if a time comes that the company is limited for growth because of its geographical presence, then we will go beyond our core market. But as of now, I think that market, there is a strong trend towards consolidation. We can get a bigger market share of a very rapidly growing market, so we are focused on that market. If for some reason we are not able to do it, we will move out, and to begin with, it will be in the other parts of UP only. So we did make a investment in Bareilly, and maybe we will do one with, if nothing works out, then Gorakhpur is a market we are looking at.
Gorakhpur, okay. Because why I am asking this question, because you are one of the players who are the leading this geography. So I think it's a good time for us to be more aggressive to cater the market.
That's a good point, and UP itself is growing very fast now. It's a 20 crore population, and real estate and urbanization is really exploding in this part of the country. So we have to be at the right place at the right time, which we think we are, and we'll try to ride this wave with how we have been doing in the past.
Okay, sir. Done from my side. All the best. Thanks, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star, then 1. Our next question comes from Faisal Hawa with HE Hawa. Please go ahead.
Sir, what is causing our movement towards Lucknow and UP markets, because we were predominantly an NCR-based player, and are the realizations there enough for our ROC, ROE calculations, for which we have been very conservative over the years? Secondly, sir, now we are almost like more than a 40 years old company. So to really give a good shareholder return, or to enhance shareholder returns, are we looking at any kind of buybacks or kind of giving some large dividends to really reward the shareholders? And third is, sir, what is the kind of movement we are seeing in the affordable housing market? Is it still profitable for most real estate companies like ours, or it's getting to be a little difficult now?
Okay, first question, why did we move from NCR to Lucknow? So let me correct it, not at all. This company has always been in Lucknow, has only been in Lucknow, and has never ventured outside. So it is not that we have moved from NCR to Lucknow. So Eldeco is a group from Lucknow. In fact, this company has operated only here. It's a separate, because it was operating only here, the separate company was formed some years ago to look at other markets in the unlisted entity of the promoters. So it's not that it has moved from Lucknow from NCR to Lucknow. It's the other way around.
Okay. My apologies for being wrongly informed.
Yeah. So there was
confusing the unlisted company.
Yeah. So it's not that we moved from there. It has historically only been in Lucknow. The second, your question was that, because maybe Lucknow does not give us the kind of ROE or ROC that other markets might. Again, I would like to correct you. If you look at the number, I think that our company in Lucknow gives the highest ROE and ROCE of all listed companies in the entire country. It is the highest, and if you look at our margins there, our consolidated revenue this year is about 150 crores and our PAT is about 45 crores. On those margins, any other real estate company in the country to give that kind of profit after tax would have to do a turnover at least 4 or 5 times of that. So our margins are very good. Our ROEs have been very good. Our ROCEs have been very good. I think they are market leaders amongst all listed or unlisted real estate companies that I know of. Second point was on, it's been a old company with a track record, and should we not give buybacks or increase the dividend? So we did do a stock split last year because the stock, just to increase the liquidity. I know it's not a value-wise, it's a neutral thing, but for whatever it is worth, we did a stock split, 1:5. Dividend, if you've been noticing, we have not only been increasing our dividend ratio. So this year, I think we have recommended 400% dividend. And so historically, it was quite low. It has now gone to 400%. We have also been increasing our dividend payout ratio. So it has reached, it used to be 2 to 3% or 5% of our profit. This year, it is, I think, almost 17 to 18% of our profit. And our intention in the long run is to take it to about 25% of our profit. Why we don't give more dividends or more buybacks is because, as I answered for one of the earlier questions, we see a great opportunity to invest this money on behalf of our shareholders at this stage of the real estate cycle. I think we are in a long-term secular uptrend. We are well placed. So it will be a good thing to put this money to work on something which the company is good at, which is doing real estate development. If the market stagnates, of course, we are going to give back the money to the shareholders, either by way of dividends or buybacks or whatever. The third question was on affordable housing. We have never been an affordable housing player. We never believed that it was a sustainable kind of model. The margins are just too thin there. And given how RERA has played out in the last 4-5 years, where as a developer, you are open to inflationary pressures, but you cannot pass that on to your customers, because once you enter into an agreement to sell contract with the customer, your price is fixed. Earlier, you could pass that on to your customer by saying that, escalations have happened. So, and this is exactly what has happened after the pandemic. The commodity prices have increased 20 to 30%, and in some items even more. And the developers who had done affordable housing had pre-booked their inventory. They could not pass on these price rise, and many of those projects are in distress. The real estate projects in India are long gestation projects. Largely, they depend on advances from customers, which is good because we use that reduces our capital requirements. We use customers' money as capital to finish the project. But what that does do is expose us to inflationary pressure, and if the margins are not high enough, sometimes that can be very, very risky for a company. For that reason, we are largely not in that segment. We would, in fact, we have always been a premium player. We would, in fact, be introducing a couple of projects in the luxury segment also, because that's a segment, end of the market, which is showing the highest growth at the moment. So affordable housing, my comment is too risky in the current model. I hope that answers your question.
Okay. Thank you so much, sir.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star, then 1. Our next question comes from Harmit Desai with Pendulum Investments. Please go ahead.
Good afternoon, sir. Thank you for taking my question. So actually, this is with reference to your most recent quarterly result. As we can see that the other expenses in this quarter are negative. Could you elaborate a bit on that?
I can't. I will ask my colleague Sanjay Agarwal if he's on the line. Sanjay, are you there?
Yeah, I'm here, sir.
So can you answer this question, please?
See, your other expense, you want to know what is the reason of increase in other expenses, right? They are negative actually, sir, for this quarter. I just wanted to know why. Sorry, please come again. In your most recent quarterly result, I am seeing other expenses are negative. It's a value of negative 141.86. I just wanted to know a little more about that.
For the last quarter, the figures are always the balancing figure. It is quite possible that in the earlier quarters, the provisions for some expenses have been taken on the higher side. And when the year ends, then they need that provision is not required. So for even in the notes to the financial statements, we write that the balancing figure is there in the last quarter. So it's quite possible that some of the expenses provision has been reversed, and it is the net impact of those reversals.
Okay, sir. And so I had another question actually. Could you elaborate a bit on your strategy for the next 2 years?
I've already elaborated, Amit. We have worked on our business development pipeline in the last year. We could not bring them to launch, but this year we hope to. And I did give a guidance in my last call that we would be doing about 300 or 400 crores of sales this year, fresh bookings, which is what we are online for that. Hopefully we should be. For that, it is important that we launch the new projects that we are tied up. And that number should increase slightly in the year after that. So we are looking at substantial increase in our top line and bottom line in the next coming years. But frankly, that's not there's no change in strategy. We are going for premium end of housing in Lucknow and riding on the infrastructure and growth wave which is happening there. So that's the strategy. And those are the kind of numbers which we are looking at in the next couple of years.
Okay, sir. And so my last question to you is Lucknow experiencing or is it receiving any strategic investments for real estate development?
No, the city is booming and the GDP of the city is booming. The infrastructure is, what has happened is in the last 10, 15, 20 years, the top 7 metros really grew in India. But now the belief is that the next set of 10 cities or 15 cities in the country are also seeing a similar kind of boom. And Lucknow is one of those, and it is the capital of the most populous state. For that reason itself, we expect the market size in Lucknow in real estate and in other things to improve significantly or increase significantly over the next 2, 3 years or 4 years or 5 years. So we are just at the right place at the right time. So, if you look at expressways, airports, rail, educational institutes, sport, recreation, so almost everything is falling into place for that city.
Okay, sir. This was it from my side, sir. Thank you for taking my questions.
Thank you.
Thank you. Our next question comes from the line of Neeraj Manseka with White Pine Investment Management Private Limited. Please go ahead. Neeraj, your line is unmuted. You could go ahead and ask your question.
You able to hear me?
Go ahead, Neeraj.
Yeah. Just a question on the launches that you're doing in the future. How is the margin profile be of those launches? Or the other way to put it is, will the margins remain a similar 40-45% range, or would it be slightly lower or higher?
Slightly lower, but still above industry average. Industry norm for gross profit margins are about 20-25%. We are at 45%. So the prices at which these will get launched should be about, the gross profit margin should be about 35%. But as we know that during the life cycle of the project, prices tend to come. And towards the end, again, the margin should become better. So in the overall, it will start at about 30-35%, but will go up higher as we go along.
So when you're saying of gross profit, you are talking of the EBITDA margin or talking of the gross profit for the project?
EBITDA margin.
EBITDA margin. Okay. So this is so just curiosity that is there profit in the land purchase price that you're holding right now on those land?
I couldn't get your question. It's not clear.
Was the cost of land much lower than the market price right now on the launches that they're doing in next 2 years?
Not really. These are the new launches which we are doing are at, we have bought land at market prices, we have assembled the land, that's why it's taking time. And the thing is that what has happened in the real estate market is, for a company like ours, we buy at market price. We used to sell at market price, but now we don't sell at market price. We sell at market price plus. The market has started giving a premium to credible developers. So that's why we continue to get higher than market margins. So the higher margins are not attributable to lower land prices. They are more attributable to higher realizations that we get as compared to the market.
So is it right to say that similar price of land, not a premium developer like you would launch, they would still do 20-25% EBITDA margin, but because of your brand,
somebody else would get 20-25% margin, we'll get about 35-40% margin.
Got it. Yeah. Thank you.
Thank you. Our next question comes from Monica Arora with Share Giant Wealth Advisors. Please go ahead.
Hi, thanks for the opportunity. So I just wanted to ask, can you throw some highlights on how the Lucknow market is growing, and how is the trend you're seeing in the market? What's your expectation on that?
I expect the market size to double in the next 3 to 4 years. Had it not been for the supply constraint in Lucknow, it would have already done so. The thing with Lucknow is that right now, for whatever reason, land assembly has become very difficult. But I do expect it to get unlocked in the next year and a half, because new master plans, new policies are coming. And the inherent demand that we sense on the ground is very, very strong. We feel like even if there were, whatever the supply right now is, if it were to get doubled or tripled, it will get absorbed in that market. And the reason for that is inbound population influx from eastern parts of UP, investment influx from eastern part of UP, which is organic. Then the government itself is investing a lot in the infrastructure. Then UP itself is growing, and Lucknow is the capital. So if you visit Lucknow, it gives you the feeling and characteristics of any growing metropolis in the country. So we feel like, as I mentioned in my opening remarks, demand is not the constraint, it's the supply which is the constraint, which will gradually get unlocked in the next year and a half. And the market size, and consequently our company size, should increase significantly.
Okay, thanks so much.
Yeah.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star 1. A reminder, if you wish to ask a question, please press star and 1. As there are no further questions, I would now like to hand the conference over to Mr. Pankaj Bajaj for closing comments.
So thank you all for coming today and for your interest in the company. I'm hopeful that we will be able to make the current year count in terms of performance. Bye-bye. Thanks.
Thank you. On behalf of Eldeco Housing and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.